What's that one investing principle that you think every beginner should master?
Um, they need to know numbers. They need to know numbers. Like people have a fear of math. But you can't do successful investing without numbers. And a lot of time, I tell my clients that a lot of the maths that you need to do with your personal finance and your investing, it's not complex. You can do it with normal basic calculator. And thank God for the internet. You can run some of these things via calculators online, or via AI models online. And so really, people need to learn numbers.
Hello, welcome to the Nigerian Investors Podcast, the unofficial podcast that tracks and reports on the activities of the Nigerian boss. My name is Mudi, and with my colleague Aye, we will be hosting this podcast. TNI Podcast is dedicated to stimulating a renewed enthusiasm among the general population with regard to the activities of the Nigerian Stock Exchange. Ultimately, the goal of TNI is to see that many Nigerians from all walks of life, both at home and in the diasporas, become active participants on the floor of the Nigerian Stock Exchange. Before we go further, we would like to place on record TNI Podcast is solely for educational purposes and not a replacement for professional financial advice. Let's begin. This episode was recorded on July 12th, 2025. Listen and learn. See you at the end. Welcome back to another episode of the Nigerian Investor Podcast, the show where we decode the markets, simplify investing, and help everyday Nigerians build wealth with clarity and confidence. Today's guest is someone whose market insights have become a go-to resource for investors tracking both Nigeria and global equities. He is a seasoned analyst with over a decade of experience and the creator of Green Ticker Tales, a podcast and blog that simplifies market movements with depth and clarity. You might know him better as at Consimodu on X or at Green Ticker Warrior on Instagram. A consistent voice breaking down stocks, crypto, and everything in between. Please join me in welcoming Onome Ohwovoriole, a respected analyst, content creator, and one of the sharpest minds in today's investing space. Onome, it is a pleasure to have you on the show.
Thank you, Moody. Thank you, Aye, for having me. It's a privilege because I would say you've probably interviewed almost the who is who when it comes to investing, at least those I know who are on social media and active, so to have me here is a great privilege, and I take it quite high.
Thank you for being on the show.
Yeah, it's a pleasure to have you here.
So let's start from the beginning. What is your background and how did you find your way into the world of finance and investing?
So let's divide it into two. Let's start with how did I find my way into investing? I mean, like every other Nigerian, they're not really taught much about money. I mean, if you're lucky, they have parents who are pretty disciplined. I mean, they might give you the basics in whatever money I give you, set aside some money from it and save. Have a budget, try and be prudent in spending. I think most kids, most people would have that and all that. But as one get older, you have to kind of work out your investment part because for most parents, I mean, they're not very few people are money savvy, especially with the older generations, people who were born 1930s, 40s, 50s. Many of them are not very money savvy. So one has to learn that part. And that's something that I've tried to do. Then how did I get into finance? It's partly accidental and it's partly deliberate. The deliberate side of things is I studied economics and statistics. So clearly, you studied economics and statistics. I mean, you're not very far from working in finance. After that, I bounced around a bit. Then I got to work at Nairametrics, which was kind of accidental. I had known who's the founder. I've known quite from a while. I mean, FinTweets or financial community on social media is a very small group of people. So everybody knows everybody. I'm not sure I mean, I'm pretty active on Twitter. If I'm going to use Twitter as a sample size, I don't think we are more than maybe 2,000 tops of people who are always talking about money. Clearly, if you're active on social media, you kind of know almost everybody who's active and talking about finance, stock markets and all that. So I'd known Dre from afar, and I'd randomly reached out to him a couple of years ago. I think this was in 2016 or so. Hey, I like what you guys do, but I think you guys can be a bit more visible with your social media and all that. And he says, hey, I agree with you, but a startup, do you want the job? So I said, okay. So I started from social media, then now started to face core analytical work. So I did that for 2 years, and then I got the opportunity to work with Bamboo, which was also purely by chance. Tosin Olasende, who's founder of Money Africa, we had known each other for a while. So my plan after leaving Nairametrics was I was going to do a postgraduate degree, which I've toyed with a couple of times, and I'm sure someday I'll get around to it.
Okay.
So Tosin says, hey, like these guys called Bamboo. I think you should check them out. They're pretty interesting people, in case and all that. So that was how I then ended up in Bamboo. Spent a short time there. Then from Bamboo, crossed over to Money Africa. Money Africa is a financial literacy platform as well. But there are a bunch of things that Money Africa does. So there's the literacy part of things. There's the advisory part of things. There's obviously the content that they create across social media platforms. So I was wearing a bunch of hats there. I was overseeing content. I was doing financial advisory. I was also at some point in time at the early days managing social media handles and all that. So between the three of them, those three firms, that was how I find myself in finance.
That's a very interesting background you have. A lot of intersections, especially with social media, right? So just curious, right? You've built a strong voice with green ticker tails, right? So what inspired you to start sharing your investing insights publicly, right? Is it your background or what else? What was the main driver behind that?
So, the thing was, I had worked at Money Africa for 5 years, and the way I plan my life in chapters of 3s and 5s. So every 3 to 5 years, I look at my life. Why are you going to now? What are you up to? What's the next thing? So I had done 5 years at Money Africa. I had ticked all the boxes. I had set out all that I'd set out to do. In some of the things we'd set out to do, we also had to modify our goals, if I can put it that way. But I wanted to go back to, will I say my first loves, and all that. I'd say my mind, so hopefully I don't piss anybody off. Sometimes life is a combination of your wives and your side chicks. And so sometimes, it starts out with your wife gives you a headache. And what some people say is that then you have a girlfriend on the side that eases off the stress. But then after a while, you remember that, well, your girlfriend and the person who you said I do to, they are not in the same category of thing. And so when your girlfriend starts to give you headache, then you remember that you have a wife and you get back. So for me, it was simple. Equities are what I find the most interesting thing to do. And even though, in all honesty, I had a bit of latitude with Money Africa. I wrote a newsletter every Monday that was focused on stocks. A lot. I had been lucky in some ways that all the places I've worked at so far have given me some flexibility in terms of my job role. So I essentially could include whatever content or whatever I was interested in. I could do it under the banner. So for post Money Africa, my plan was I was going to focus on cybersecurity stocks because that's a sector I'm always interested in. And so the plan was to become a cybersecurity stock analyst. It was either that or healthcare, because when I looked at both sectors, I think that there are sectors that are very difficult to disrupt. I mean, when you look at healthcare, what might change will be lifestyle of people, the drugs you take. But healthcare is simple. You have a human body, and when the body breaks down, you fix it, or if it cannot be fixed, you die. Cybersecurity is also quite simple. You have more and more people using the internet, greater use of technology. That means that you're also going to have more and more bad actors. So as long as you have higher use of technology, you're going to have bad actors. Then you're also going to have a bigger need for cybersecurity and all that. So that was the plan. Along the line, I just felt that a lot of the openings I got in the cybersecurity space would have required me to jackpot. And I wasn't very keen on jackpotting because, I mean, I travel every now and then, but Nigeria is, I'm a bit lazy when it comes to money. I like to optimize for ease. And Nigeria is simply the easiest place in the world for me to make money. Irrespective of my job. So it was a case of, okay, I don't want to jackpot, but how else can I optimize what I'm doing? And at the same time, when I looked at the landscape, it's very difficult to get content around Nigerian equities and African equities. I can go on YouTube and Google Nike, Nvidia, think of almost any stock in the world, and between Twitter, TikTok, YouTube, I'd find enough decent information. In fact, you have on Twitter, you have communities built around stocks. So you have Twitter handles that are focused on Tesla. You have people who are doing weekly Tesla spaces or Coinbase spaces. And then when you look at the Nigerian market, man, you're struggling to get data. So that was how Green Ticker Tails came about. And for a bit about the name, it's quite simple. Green, when you say the markets are green, it's positive. Ticker is a short name or short form for a stock or crypto or whatever financial asset. While tail is a story. So if you put everything together, stories about stocks, content around stocks, essentially, or crypto, or whatever. So that was how a Green Ticker Tail came about.
Very interesting. I like the analogy with the side chicks and wives. Mudi, you have any questions?
Yes, yeah. It's very interesting the way he puts it and the way it came about the name. I've always wondered, Great Ticates, what's the reason behind this? But luckily, he's explained that to us right now. So, how do you balance content creation across platforms like X, that's Twitter, Instagram, and YouTube without burning out? Because I see you're very active in all these platforms.
I mean, it's a simple answer is hunger. There's that popular Burna Boy song. I mean, Dangote still dey find money. So who are be we are not go find money? I mean, simple. It's so you just have to keep working. If Dangote at almost 70 is still hustling, still pushing. I mean, I've not even done like 0.1% of what he's done. So you just have to work. But you also have to understand yourself as a person. Luckily, since I'm working for myself, I don't have your typical 4 a.m. get up, hit the road, 6 p.m. you're back on the road. So I can easily wake up at 3 a.m., work till 9, look at the markets by 10, sleep for 2 hours, 3 hours, I'm up by 2. And so I I just work, man. It's like it's your hustle. It's your job. You do what you have to do. And then on the planning side of things, I mean, some platforms have more priority than others. So for instance, I'm probably the most active on Twitter, but I'm also increasingly building audience on YouTube, and each platform is for strategic reasons. One of the things I've seen in my previous job roles is that when you are concentrated on only one platform, if anything happens to that platform, you're going to be in trouble. At Money Africa, I don't know what the current state of things are, but when I was there, Instagram was a key revenue driver, and Instagram is, I think, probably where the firm had its biggest audience. A couple of times we lost our Instagram page, and when that happened, there was a dip in revenue. And luckily, because we're fairly big platform, and I guess when we have connects as well, we're able to recover the page. I think it happened twice or so. So that also taught me something, that you never want to have only one platform, because if anything happens to that platform, you're stuck. So much as I'm fairly big on Twitter, I'm also everywhere else just to cover base. Two is also because people who have built communities across different social media platforms. So there are people who probably don't go to Twitter more than 3-4 times a year. Maybe Facebook is your thing, or maybe TikTok is your thing. So if you're only in one platform, then you're going to miss out on those people. More importantly, for the younger generation that I'm trying to get, or maybe let's say the Gen Alpha and Gen Z, a huge chunk of their time is spent on TikTok, Instagram, a bit on YouTube as well. So even though my base is Twitter, I'm covering all those bases because I also want to be able to get to them as well. And if you're going to build anything that is sustainable for several generations, you have to cover all generations. Cover your own generation, cover the generation below you, and cover the generation above you. So that in a nutshell is what drives me pushing across all platforms.
Interesting. I like that, what you said, just basically across all platforms for all generations, right? But then again, what platform has really helped you connect the most with your audience, right? And why that particular platform? Basically, which platform have you noticed is the most influential when it comes to passing across your insight, your message to your audience, and why?
I think if I were ranking Twitter, because one, I've been most active on Twitter. I think I've been on Twitter probably, if I recall correctly, at least 10 years. So that's where I'm mostly known. But increasingly as well, I'd say YouTube also plays a role, because one of the reasons why I quite like YouTube is YouTube covers audio and visual. So there are people who are on YouTube and they're not watching the video, but they're listening to what you're saying. Twitter first, because that's where I'm known, and YouTube, because YouTube gives me the opportunity to push my content across different places. And from a creative angle, the process of creating YouTube content for me means I can take that content and share everywhere. A lot of my videos on YouTube are simply me running through slides because I'm dealing with numbers. It's easy to put numbers that way. But the slides I create on YouTube or for my YouTube videos, I share them on LinkedIn, and the videos I share create primarily for YouTube. They usually go on LinkedIn, TikTok, and I'm not sure yet, but I'm considering it. Maybe with time I'll have some of those videos go on Twitter as well. So Twitter is like my complementary card, while the other platforms are like my growth area.
That's interesting. So yeah, that's interesting. So we just want to switch to the Nigeria market. There's been a bullish trend in the Nigeria equities recently, and you being a very renowned fundamental analyst within the Nigeria equity space, what do you think is driving this rally? Is it just new investors coming in because of the education that is going around, or you think there are foreign investors trooping into the market because the market is highly undervalued? What do you think is really driving this rally?
Okay, so I would divide the rally into phases. Now, if you are looking at the most current phase, maybe if you're looking at the last 3 weeks, 1 month, maybe 2 months, the rally you're seeing, the factors that are driving it, you're beginning to have foreign investors moving. And why do I say so? Like, if you look at some of the stocks, and just as a disclaimer, I'm sure you probably have it somewhere, but I just mentioned it to anyone who's listening. So, no stocks mentioned here are financial advice in any way, shape, or form. Do your own research. This is not financial advice, but obviously you cannot discuss stocks and investing without giving actual examples or mentioning names. So if, in my view, if you look at the last couple of weeks, you're seeing strong movements in companies that typically foreign investors would go into. So if you look at GTCO, if you look at Zenith, if you look at Access, you're having huge volumes. And clearly those volumes are institutional volumes. Now, whether they're institutional, domestic, or foreign, that's an argument. But I probably lean towards foreign institutional investors coming in. And obviously, you have stable exchange rates in the country. You have all the reforms that have been carried out. Then the market becomes quite attractive. That's one factor. Another factor, and it's a harder one to measure, but I can trace it to probably the last banking race that we had, when you had the likes of Fidelity, Eco, I think Zenith, and a couple of other financial institutions raise money. It's attracted a a whole a whole new, will I say, class of retail investors, younger investors and retail investors. And why do I say so? I remember when GT paid its final dividend for FY 2020. I think it was 8 naira and some fraction. And I saw a lot of excitement on Twitter. I've not seen that kind of excitement in a while. What that tells me is that you had a lot of people who invested in that offer. And obviously, naira as a dividend is a huge one and all that. So imagine people who bought at 44 naira and you're getting 8 naira. I mean, that's huge. And if you bought 1,000 shares at 44, 45, 50, you're getting 8K. So that excitement, let me know. And even if you look at more recently, you're having a lot of a buzz around the stock market, and it's mostly retail driven. Then thirdly, maybe the oldest of the factors, if I can use that, is that all the hard decisions that had to be taken, or the side effects, if I can use that word, are fading away. So last year, you had your devaluation, that triggered a spike in inflation, triggered FX losses in firms, that squeezed consumer demand. Maybe aside financial institutions, almost every other sector of the Nigerian equity space was affected by all those issues. But those issues beyond that, I mean, there's sunshine after every storm. Rain doesn't fall forever. So what you're seeing this year is that you're seeing a gradual recovery, because, and how I usually like to analyze the markets is, I mean, what's the worst that could happen this year for the rest of the year? Maybe you have crude oil drop to 30 or 40. It's highly unlikely for this year. I don't know about next year. Every hard thing that had to happen happened. And so companies are beginning to recover. Pre all the economic shocks, a lot of these stocks have been cheap like since forever. I mean, 2020 was 5 years ago. If I recall correctly, 5 years ago, Zenith Bank was trading at less than 20 naira. DT was trading at less than 20 naira. These were companies that were making 3, 4, 5, 6 naira in profits per share. So it just made common sense. A lot of the stocks, literally most of the what you can call blue chip stocks on the market, they were undervalued. And they were undervalued because you had FX issues, you had a struggling economy. The economy is still in a challenging place, but it's much better compared to where it was last year. So if you put all these factors together, these are the factors that have led to this booming stock market.
Yeah, very interesting. And one trend that we're even noticing with this recent boom is the fact that a lot of investors, especially new investors, I mean, the platforms that, at least the platform I know I and Mudi are in, right? You get to see a lot of new investors coming up, and the question that they always ask, this question is, I think, is just across board. What stock should I buy? I'm new. I want to know what to buy. What should I invest in, right? And it's because I think a lot of these new investors don't understand the risk, right? So with so many informed investors now entering the market, right? What are some of the key risks that you would advise new investors to be aware of as they're entering the market right now? Because we are seeing a bull market, right? And stocks are green right now, but for some newbie investors, they don't know that the market can equally be red. And it's not a bad thing. It's the way the market works. You get bulls, you get bears, right? But then what risks should they be aware of so that they can better position themselves to get into the market?
I think the first thing people need to know, and it's a simple thing, but a lot of people forget, is that stocks are a high risk investment. I know people tend to forget that, but that's just what they are. Stocks are a high risk investment. Anywhere in the world, stocks are a high risk investment. They are high risk because they are volatile. Prices go up and down. And they can also be high risk because at the end of the day, ultimately, companies are like human beings. Human beings can drop dead suddenly. Human beings die slowly sometimes. So the same way companies die slowly, companies wither and all that. So people need to remember that. Just from basic personal finance, you shouldn't have all your money concentrated in high risk investments. You want to do a bit of low, medium, and high risk, and maybe very high risk if you can stomach the appetite. So people need to remember that. I suspect that a lot of people, and that's one of the reasons why anybody who's sensible in this space and has influence or large following. Essentially, you will have large audience. Everybody is quick to qualify that whatever they say isn't financial advice. People need to do their own research. So people need to know that stocks are high risk, and so you should have all your money in high risk. Secondly, I think people need to be able to know how to read numbers. I find that a lot of people just are caught up in the hype of maybe I've been seeing this stock trending on social media. I've been seeing a lot of the finance people I know or FinTwits people I know talking about it. So they go and buy. You need to understand what you're buying and if it makes sense. You need to be able to read financial statements. And then thirdly, it's maybe my own way of will I say benchmarking things. You have to ask yourself that yes, there are two ways you make money from stocks. You make money when the value of the stock or stocks goes up, and then you make money from the dividends you're paid. Now, dividends are a function of profitability and cash flow as well as management decisions. Dividends are predictable. Capital appreciation is not predictable, especially for a Nigerian market. If you're looking at bigger mature markets, US, UK, and rest of the world, you can kind of predict maybe plus or minus 20%, or between 10 to 20% up and down, a good year or bad year. For the Nigerian market, it's also something people forget that a lot of the good years that we had, they've been triggered by two things. The last two bull runs that we had were because one of them, the year that we had the market up around 47%, it was quite simple. We had the devaluation, stocks were cheap in dollar terms, and if I took my naira, converted my dollar to naira, I could buy more stocks. So if I had, as a foreign investor, if I had a more stable currency, then yeah, it makes it worthwhile to play. Prior to that, it was a year where we also had fixed income treasury bills were doing 0.01% or so. And obviously, T-bills are doing 1%, and you have a stock market, if I can go 10, 15%, I'll put the money there. So you had a lot of money move from fixed income to stocks. Much as people are excited about the market, they need to remember that it's not permanent. So you always want to ask yourself, and even for myself, what I do personally is whatever I'm buying now, if it goes down 50% in value, will I be comfortable with it? Two is, would I be able to recover if I had no capital appreciation? Would I be able to recover my returns based on dividend? And if that is the case, then don't bother. So for the longest of time, a lot of the stocks that have been trending, I've held them for 5, 7, 10 years because it was quite simple. It was a case of valuation and dividends. And so people need to know that. Also, as an aside, I'm a Jay-Z fan, and one of the songs he says, ignorant is that you shouldn't believe everything that you hear. You need to be a bit more circumspect. I think that a lot of people are getting caught up in the buzz. Buzz can be a positive thing or a negative thing, or to put it differently, buzz can be artificial or buzz can be natural. So if you're getting caught up in the buzz and you don't know if it's artificial or fundamental or if it's contrived, when the music stops, you're going to end up stranded and all that. So I think those are the ways that newbies should approach. And maybe lastly, they should stick to simple companies that they can analyze. And if you look at your telcos, look at some of your banks, Nigeria is a place where you should start with the boring things, because the boring things don't give you a headache. So if you look at boring businesses that aren't very sexy, because again, according to some married people that I know, when you want to get married, there are baddies and there are civilians, right? So the baddies are the nice, flashy ladies, and the civilians are the boring ladies and gentlemen, because it can also be men on the other hand. The baddies are nice to look at, baddies are nice to hang out with. But when you look at the day-to-day, everyday hustle of life, they are not designed for that. And so you have to also understand what kind of stocks are you holding. Are you holding stocks that are baddies? Are you holding stocks that are civilians?
Wow.
I'm really,
Nice analogy.
really enjoying these analogies you're using to explain yourself, especially, and I think this is something that for quite some time you always see expert opinion always drive towards this point, right? Go for the boring. Don't go for the exciting. Yes, it's easy to watch movies like Wolf of Wall Street and get swept away with all the excitement of, oh, you can just make quick money, and you see some stocks go up crazy. But as a starter, before you even start getting seduced by all this hype and all this, go for the boring, go for the easy, go for the ones, go for the low hanging fruit, go for the things that are easy to understand. And from there, you can just build up. You can build up tolerance, you can build up risk, you can build up understanding. Then you can take on more risk, right? So yeah, this is very, very good advice for newbie investors, right? So
Yeah.
Mudi, anything for?
Yeah. So is it, like you said, it's a very good advice, because at the end of the day, the market, I believe the market is always driven by fear and greed. And once uh, the market is in a euphoria state where everything is green. I mean, on Friday here, there were over 36 companies that made a new 52-week high, So for the past 1 year, 36 companies in a day, their share price increased to an all-time high within 1 year. That tells you that the market is buzzing, like Onome said. Everybody is excited. And once you are excited, the way worry people will say, that's where you lose guard, because you already lose guard. And when you are excited, you forget about security, you forget about washing your environment to be sure that you're safe. Everybody's lose guarding right now. And once you lose guard, you might probably be taken unaware. So his advice is valid. And you can also attest to that. So many people that have come on this podcast, they've also pointed that out too, that new investors should tread carefully. What Onome said is very important, because look at those old, tried and tested companies. You know them. They are very popular. You can't do without them on a daily basis. And they've been there for many years. So they know the terrain, they know how the business is run. If you can't wait, you just want to join the euphoria, you want to join in the book, one would expect you to pack your money into those old, tried and tested companies while you learn. Because I see so many speculation on the timeline. I see some stocks, they're moving very fast. And I try to wrap my head around the reason why they're moving, because I believe in fundamental analysis, but I can't really find any fundamentals guiding or supporting those bullish run for those companies. All I hear is speculation. Oh, something is about to happen. The government just signed an agreement with another country. This is what they are trying to do. Speculation, speculation. Onome said equities are very high risk type of investments. You should, as an investor, especially newbies, because we mainly cater for newbies on this podcast, you should heed to the voice of wisdom. That's very interesting. Right, moving on. Onome, you often share data-driven takes about different companies. I know you also do crypto and US stocks. But in Nigeria, let's focus our attention to Nigeria. In Nigeria, what sector or stocks are still the most attractive in 2025? It's not a financial advice anyway, just your general opinion.
I mean, that's a difficult question now, because obviously, as you said, if you look at last week's close, I haven't seen any performance like that, I think, in the last 3, 4, 5 years, or maybe longer. So a lot of the decent stocks, they are not expensive, but they are at a stage whereby they are fully valued. So whatever further appreciation you're going to model for, it has to be based on future performance that you anticipate. But I think there are a couple of sectors that still have some room. I mean, insurance is there. Yes, some of the insurance stocks have run custodian, but I still think that there's some room in that space to run. You have oil and gas. I think Aradel still has. Aradel, whichever way you value Aradel, that stock should be trading significantly higher than where it is at the moment. The only thing that has held that stock is you've had some large investors periodically, selling down their shares, and then the price comes back. Just by looking at the fact that it's a bigger company because of the similar assets that they acquired in a joint venture with other firms, it should be trading much higher. Same thing you can say for Seplat, but it's illiquid. I think some of the banks as well, tier 1 banks, they're actually still cheap. The only challenge you have, and is to say, and this is where knowledge comes in. You have to ask yourself, what do I think is the value of this bank? In the worst case scenario, if I were to strip away all the loan loss provisions, what would be the value of this bank? And so if you do that number or do the numbers for those firms, then you see where they are and you can now decide, fine, I'm not going to wait for the H1 numbers that would show those colors. I'm just going to put it in there. So I think those are sectors that have some more room to run. And I would say for maybe those who are a bit savvy, even with the stocks that I would say are fully valued. I mean, when you look at what's your NACO, Vitaphone, AP, Mega Paints and Co, they're kind of close to, I don't see maybe more than 15-20% upside. If one is savvy and you have a crazy blip or you have a correction in the market and those things come down 15-20%, then they might start to become more interesting, more so, especially if you are looking at it from the angle of dividend yield, which is the dividend return on proportion of share paid out as dividend. If you are able to do it 10-15%, in my view, regardless of whatever the valuation of the stock is, then it's fine, because you know that in 10 years, you get your money back, and if you have capital acquisition in between that, then that's a bonus. So I still think there are opportunities. People just need to be a bit more strategic in how they approach it.
So looking at the Nigerian stock market, with the way new investors tend to look at the market, there are some common myths that they tend to look at. I think one common myth that I think just keeps running up is the fact that penny stocks tend to, make a lot of money, and we even tend to see this play out. What's one common myth about the Nigerian stock market that you believe needs to be debunked, right? It can be anything, right? So what's one myth that you think it has been disproven and it needs to be debunked as soon as possible so that investors can learn and just move away?
I would say there are two. The first would be expensive isn't necessarily a bad thing. A lot of people are shying away from the really expensive stocks because people feel, hey, they're expensive or they've risen sharply. There's not much room to run. No, it's not a bad thing if a stock is expensive. And I'd give examples. Seplat is what? Seplat is around roughly 5,000 naira a share. And that's a stock that probably in the next couple of years could, all things being equal, should easily do maybe 40, 50, 100%. So the question is, 5,000 naira for one share is expensive, but if that one share or that stock should be valued significantly higher than that, and anybody you discuss with in oil and gas space, whatever the challenges around converting, tax issues with some of those assets and all that, but regardless of that, it should be valued way higher. You can say the same thing for MTN, that's what's 100 and some fraction. You can say the same thing for a CAP. You can say the same thing for a NACO. Expensive isn't really a bad thing. It's all about the business model. So sometimes people need to look beyond just penny stocks and say, what's expensive or what's still worthwhile in buying? And there are lots of companies that are in that category. That's one. And then secondly, I think people still have the myth, because I'm only seeing these questions everywhere I am. How much do I need to start? How do I get a broker? So really, it's not really expensive to start investing. And I think that's a conception people have, because when it comes to stocks, you don't see, with every other investment, I hate to use this comparison. When you look at it, if you can afford to gamble, if you can afford to buy beer, you can afford to buy stocks as well. The stocks aren't more expensive than those things. 2,000-3,000 naira, I think, should be able to get these stocks anywhere. So a lot of people are still sitting on the sidelines because they think it's expensive. And then maybe the third one is market crash. Every time we keep talking about 2008, but I think this time is different from 2008. If you are buying quality names, 2008 was different because a lot of the names that crashed didn't have chance to justify where they were trading at. And this time, at least for the quality names, it's a bit different, because when you look at a GT Bank that's essentially trading at almost 100 naira, I don't think there's anybody who will tell you that GT Bank is overvalued. in anywhere in the world. But I know analysts will say so. That stocks have gone up 30, 40, 50%. And when you look at it, the market is up about 20 something percent this year. The last 5, 6 years, we've had markets doing 40 something percent, 30 something percent. So there is theoretically still room to do another 15, 20% higher. So I think people just need to just forget about those misconceptions. Cheap doesn't always mean that it's good. Some people would argue. One of my favorite bank MDs will always say that the fact that, I mean, if something is extremely cheap, sometimes you have to ask yourself, then there may be a problem, because if we are really a quality stock, question I'll ask is, why are you trading at, say, 10, 20, 30, 40, 50 kobo, or even 1 naira? I don't believe any quality name in the Nigerian market should be trading below 1 naira. And if that's the case, then I think, markets would price that. So really, I think people just need to just let go of those misconceptions and just take investing the same way they would take any other thing.
Very interesting. Completely agree, especially with that point when it comes to expensive stocks. I think one of the biggest issue with these expensive stocks is the liquidity, especially when it comes to something like Seplat, right? You consider the amount of units needed to move something like Seplat, you then realize it's quite a lot. I mean, I think 100,000 units is what is required to change hands at any price to move the market. So a lot of people tend to look at things like that and get worried. I always say, if a stock is cheap, buy it, right? You never. I mean, the future, the company keeps growing, dividends keeps growing. You're likely going to see some appreciation in dividend yield. You just can't tell. So if it's cheap, it's right. But I mean, whatever works for anybody, right? Some people just rather prefer a lot of liquidity. I think we had one of our guests come and explain why liquidity is very, very important. I think it's also something that investors should keep in mind. So yeah, Moody, you were saying something.
Yeah, thank you so much, Aye. So many points he raised. And if you look at some of the things he talked about, you see people always refer back to 2008. And like I said, a lot of things have changed. 2008, where there are so many reasons why the crash really affected so many people, or lack of education, to the market wasn't really positioned the way it's positioned right now, because there's been a lot of reform since then. Then most people were having paper certificates. And for you to be able to sell your shares, you have to convert them to electronic form, dematerialize them. And it took a while for so many people why the market was crashing. So those are some of the reasons. And the fact that the stock is a penny stock, there's a reason why they call them penny stocks. It doesn't mean that it's likely to rise in easily. So those are some of the things you also have to consider as an investor. Yeah. So moving on, this question, I think he's already answered this question before, but just want to reiterate and see if there's still something we can get out of this for our listeners. Do you think local retail investors are finally warming up to the equities again, or what is driving this shift?
I mean, yes, but the thing is, I think we're starting to see not just local retail. I think we're starting to see younger people, and also we're starting to have women in the market. So why do I say so? I remember, I think I saw probably floating somewhere online when MTN SA did sell down of the shares that they had and all that. By the time the data came out, I think I saw it somewhere. I'm sure it's online. That you had more women participating in the market, which is a good thing, because one thing I would say in my line of work generally is that women are more risk averse, and for some reason I would say they tend to shy away from investing. So they're pretty good at making money. They're pretty good at saving money, but investing is kind of part where they struggle. So I think we're seeing more women, and it's always has been baffling to me, because I mean, when you look at the top 20 or 30, I hate the word influencers, but that's the best word to use, or that's the available word to use. When you look at the top with influencers in the country, most of them are women. And maybe this is a conversation for another day, but it's food for thought for your audience. How is it that women are probably shying away from riskier stuff, but you have more women teaching in this space? And so that tells me two things. that probably you do not have enough men investing, which is odd, and that's a disconnect that needs to be fixed. But to go back to your question, yeah, you definitely have more retail investors because the buzz I'm seeing, I mean, wind back 3-4 years ago, didn't have this kind of buzz. So this is not even I would say this is not a peak bull market. I think 2-3 years ago we had the market do what 30-40%. Um, Still the same stocks, still the same names. I didn't have Twitter excited like this. So you definitely have more people playing in the markets, more younger people, which is always great because if you have more younger people in the market, that money is kind of going to stick around for a while. So you have people in their 20s investing. It's likely that they'll be in the market for 10, 15, 20 years. And so you want to have more of that. And it also then becomes a generational thing because if you are able to master investing, you can pass it on to your kids or pass it on to your spouse or pass it on to family members. And then they also continually invest. So that's why you can see that people passed on the demon from 2008 to their kids and family. And hopefully, in a much more sane market, people also pass on that knowledge. So clearly you have more people invest, and it's a good thing because I'm also seeing you have more and more people sharing knowledge. When you look at someone like Compounding Naira, I'm happy to see Compounding Naira on Twitter. I mean, investing journey is documented. It's clear. That's a clear example. So, we're having more people sharing, more people investing. Hopefully they're investing in right stuff. And so it's generally a good thing, and I'd like to see more of it happen.
All right, interesting. Now just taking things to the macroeconomic side, right? Looking at the global markets and then how this impacts the Nigerian market, even Nigerian stocks, and then for investors in general, right? So how do you personally stay up to date on global market shifts, right? And how much weight do you then attach that to shaping your Nigerian portfolio? What stocks you would pick, what weight you're going to give them. So yeah, how do you look at the global macro picture, and then how do you then use that to shape how you're going to pick Nigerian stocks?
I mean, it depends on the sectors, right? So if you say what sectors are directly or closely impacted by global macro issues, I mean, you have your oil and gas firms because crude oil is a globally traded commodity. Whether you're dealing with upstream oil and gas, which is, I would say, that's probably the more interesting space to me because they have better profit margins. Downstream is kind of a bit fuzzy because clearly we have the Dangote refinery. And so there's that whole back and forth between the Dangote refinery and independent marketers and all that. So oil and gas is a global thing. And whatever happens, if you have crude oil prices going up, that's good news for upstream. You have it going down, that's bad news. But it also depends on the player as well. So if you take an Aradel that has a refinery, cheaper oil is definitely better for refiners, right? Compared to a Seplat that's exporting, cheaper oil is negative for them. So oil definitely sectors are affected by or immediately affected by global macros, oil and gas, the agricultural space. So a lot of these players, your Kumu, your Presco, their crude palm oil prices are kind of indexed to global prices. So positive or negative news filters into those companies as well. But generally, I think that the biggest pass-through effect that you have is the exchange rates. So if you have stable oil or fairly high oil prices, it means that you have a fairly stable exchange rate. And a fairly stable exchange rate means that the cost of inputs for many of these firms is kind of stable. If anything happens to your exchange rate, so if anything happens to your crude oil production or crude oil price, and your exchange rate comes under pressure, it means that cost for a lot of firms in the consumer space, higher petrol prices affects your telcos. So generally, I mean, those are the things that I watch. And maybe lastly, the banks. Banks are in an interesting place because I mean, clearly, if you have pressure on your exchange rates, then you have a devaluation. For banks that have foreign assets, that's kind of positive for them. On the flip side, Remember that oil and gas is a key sector for many banks in terms of lending. So if oil and gas comes under significant pressure, then those companies are heavily exposed, come under pressure. So that's how I tend to look at just global macros as well, and then how they affect domestic macros, and then how they affect players on the stock market here.
Okay, that's interesting. So now, how it affects the Nigerian stock market is on the one hand, then how do you think this will affect the average retail Nigerian investor, if at all?
I mean, okay, so let's take this year and last year, right? What happened last year? We had devaluation, you had removal of oil subsidy, consumer demand was squeezed, and all that. This year, if you have stable exchange rates or stable oil prices or decent oil prices mean stable exchange rates. The stable exchange rate means that your inflation should not be too problematic. And so that means that in terms of purchasing power and beyond purchasing power, investing power, because you need to have money left over to invest. But if you are barely able to eat and put over the roof and taking care of your essentials, then you can't invest. So as long as when you look at the short to medium term forecast, I'm not into where is Nigeria going to be 2-3 years from now, where is the exchange rate? Nobody knows. But I can easily say, okay, let's look at the next 2-3 months, 6 months. Let's see how things are. I think that if they remain where they are, then the average everyday person would be able to invest or would continue to be able to invest and all that. But also remember that from next year, you can see that the political season is warming up, and so it's going to warm up faster next year. That also comes with its own pressures, or positive and negative. It could come with pressure on the exchange rates. You have investors that bought T-bills and bonds and all those things pulling out money. It could be positive for people who are investing what I like to call the dirty December stocks. In this case, you have your dirty election stocks. That could be positive. But if I look at, yeah, it could be positive because, I mean, there's money is going to circulate, right? You have your hotels are going to make money. Your telcos are going to make money. Logistics, some of the logistics will make money. And some of the banks,
The
breweries will make money because then you're going to host party people and all that. So, I mean, in how I view investing, so sometimes for some of the investment cases, it's not even about this year. It's more about include next year in your calculation because there are some things you can predict, regardless of whatever is going to happen next year. It's a pre-election year. People are going to spend money. Every political party is going to spend money. I did a trade a few years ago about how much I mean, and the numbers are available online close to political people. It probably costs maybe 400, 500 billion naira to run for presidency in this country. You're looking at states, depending on the state you're looking at, probably cost you maybe 5-10 billion or 20-30 billion to run as governor. Multiply that by maybe 30 states. That money, head or tail, is going to find its way into the market directly or indirectly. And so even though this is not a political analysis thing, that is money that is going to enter the stock market directly or indirectly. So in investing, people also have to take that kind of view. Because if you are in the US or UK, you may not be thinking that first big deal about elections in terms of, but no big deal. Or Nigeria elections are a big deal because you have money cascading left, right, and center. So I think if I look at from now to the end of the year, I think that barring, I mean, the only uncertainty that you cannot measure or factor is the political actors. If the political temperature isn't heated in the country or heated beyond reasonable place, and we have crude oil prices kind of steady, then yeah, in 2025, the rest of 2025 should be a good year. If the political actors heat things up, or if crude oil prices nosedive suddenly, then we could have a problem. But I mean, things you can see, crude oil prices, I think, will be pretty much in this current band, and then we should be good. Yeah.
So then going into capital markets versus your personal portfolio, you work in financial markets and also invest personally, right? So how do you draw the line between your professional responsibilities and your personal investing decisions?
Oh, it's clear. In fact, the line is very thick. It's thick because there's a clear demarcation because let me start with my own portfolio, just at least without mentioning names. A lot of the names I hold, a lot of the stocks I've invested in, I've held them for the last 10 to 15 years. So obviously I made a bit of change, but valuations are much higher. So if I bought maybe a custodian, I bought it at what? An average of say 7 naira. This custodian is trading around 20 something naira. Recommending it at this point would be based on the forecast value that I can see from this point. So a stock that is 20 naira now, my target exit price or my target annual return in terms of dividends may be a bit lower compared to someone who myself who bought it at 7 naira or whatever. So I mean there's no conflict because investing is personal, right? In dealing with clients, you draw portfolios based on who they are. So client A can be 18 and is extremely risk averse. It's totally fine. Client B can be 45 and have a chunk of money to invest. So there's no conflict because at the end of the day, one of my guiding principles is maybe because I believe in taking nothing to chance. I always assume that anything I'm doing, is it foolproof? Is it watertight? So it's never, I mean, discussion with clients is never based about, it's not about vibes, it's not about what's trending. It's really about, do these numbers make sense? And so if anybody says, Onome said you should do A, B, and C, can I defend what I've said anywhere in the world? And if the answer is yes, I do it. And if the answer is no, I don't do it. So there's no conflict. And maybe because I'm not a broker, right? So it's not a case of I'm recommending ABC because it's in my portfolio. I know the firm, know someone. No, it's more about are the fundamentals sensible. So really, there's really no. In fact, my own portfolio tends to be. I always tell people because sometimes people often ask me what's your portfolio and all that, and I say that. Look, I've been investing for almost 15 plus years now. There's no way you can go with my portfolio because times have changed. One, what I bought 15 years ago and what someone is going to buy now, it's not the same thing. It's not the same valuation goals and everything. So you can't, and that's why I keep telling people that you cannot go by what people do. I mean, I think my average for MTN is around 120 or 150. MTN is like 400 naira now. There's someone asking me, should I buy MTN now, for instance? Sure, but there is no way expecting MTN to move from 400 naira to 800 naira. Yeah, it will happen, but it's not going to happen in the next one or 2 years. Maybe give them 3 to 5 years. So clearly expectations have to be different. So for me, if I walk out of MTN, I'm good because my price is much lower. So really there's no conflict, but it's a case by case basis and it's not even about me. It's more about what makes sense. I remember telling some of my clients that a few years ago, if we're going to draw a portfolio, it used to be very easy. Pick some stuff from America, you pick some individual stocks, the dollar mutual fund, and you're good to go. But now America is a more volatile place. 5 years ago and now, pick two plans side by side. They're not going to be the same thing. So even if you take Nigeria, the portfolio draw 5 years ago that maybe had Zenith Bank at maybe 20 naira, that maybe had custodian, I don't know, maybe 10, 12 naira. And somebody who's starting investing in 2025, your expectations will be different. In some cases, I might not even go with those stocks because the question is, GT is at 100 naira essentially. How many years do you think it will take to get GT to go from 100 naira to 200 naira? Sure, it's not happening in year 1 or year 2, year 3. Probably will take a bit longer. Meanwhile, you have tier 2 banks that probably can do higher returns, or even have tier 1 banks that are trading far below value. And so that probably will be better. So you have to just blend it on a case by case basis. For me, there's no sentiment when it comes to money. I go with the numbers. Really, I go with the numbers. And then you go with the information that you get based on your network and based on the experience you have in the market, because Nigeria is an interesting place. I like to say, and to quote, that, you can't live by only Excel in Nigeria. So you have to do your Excel valuation. You have to do your street valuation, and the remaining is God/luck valuation. So those are the valuations that you blend. You blend all of them, and obviously Excel maybe 40%, Street maybe 20-25%, and then the remaining is God slash luck. So that's how I view money.
That's very interesting. I think this is a common right, a common thing that I mean there are different variations of saying this, right? That investment is bespoke, it's unique. Every individual has their own different approach. I mean, and this is something that I think we need to keep reinforcing to investors. I personally made a lot of mistakes when I first started out. I picked quality stocks, but I picked them at prices that should relatively have been a bit too pricey given the Nigerian context. I was using I'd read a lot of foreign books, so I just used that model. So I just ended up buying some stocks in Nigeria that I could have paid lower for, but I was just going with that mindset, right? So yeah, the investment is definitely something that you need to think about your context. You can see two investors with exactly the same stocks in their portfolio, but different percentages, different weight, right? One person will have 20% more in one stock, and then and that will just completely change their performance. And if you understand compound interest, you know that even ordinary 2% can make a huge difference over a long period of time, right? So yeah, I completely agree with this your point, right? So Moody.
Yeah, that's interesting take as well. Working as a financial analyst, I think it gives you the opportunity to really analyze different companies and you make your own judgment, a personal judgment. And being in the market for a very long time too, it shows because if you look at, you've been in the market for 15 years. I believe that time, let's use UBA for instance, UBA was trading less than 5 naira back then. So if you own UBA, probably your entry price is quite different from whoever that is coming into the market right now. That's a huge difference because let's say 5 naira and today UBA is trading around 42 naira. That's a big difference. So yeah, that really matters a lot. Now, just a follow-up question. Has working within the financial system made you a better investor or do you sometimes find it limiting?
It's definitely made me a better investor. In fact, I would say that the biggest takeaways the biggest takeaways in the last couple of 9 to 5 jobs I've done have been shaping my own financial intelligence. And I'll give you an example. Proper financial job first was Nairametrics. With Nairametrics, I was writing every day. Initially, I was covering Nigerian macros, covering random things, written on music and other things. Yeah. But with time, then as the firm became bigger, and I think one thing that I give Dre, who's the founder, he knows how to play people to their strengths. So Nairametrics, I spent 2 years covering Nigerian markets. I was literally writing every day. That's all. You cannot watch Nigerian markets day in, day out for 2 years and not develop decent financial intelligence about them. So that was the takeaway from that job. But Bamboo was the shortest because I did 3 months in Bamboo and then Bamboo hadn't kicked off operations. But Bamboo kind of gave me exposure to the US stock market because obviously, clearly that's what they were setting up to do. For me, it was a new thing because this is what 20, if I recall correctly, this is maybe 2016 or so. I didn't even know what Bamboo was or who they were. I mean, if I tell you 2025 that you don't know a Bamboo Trove or Chaka, then I'll look crazy. So that gave me a bird's eye view into that market, taught me resources and all that, and gave me free time to learn things. With Money Africa, I did a mix of everything because obviously, if you're working in a financial literacy platform and you're covering everything in finance, so if GDP numbers come out in Nigeria, people ask you what do you think about it. If China does something crazy, they ask you what do you think about it. So you are constantly on your feet learning about anything about finance, economics, local reform. That is the biggest takeaway. Then there's also the human, I would say, psychology part of things. I've talked to 1,000 people in 5 years about their money. So if you do the numbers, that was literally I was talking almost every day to someone about money, about their money issues. You cannot speak to 1,000 people about money and not become decent with your own money because you get 1,000 perspectives. Because at the end of the day, human beings, we are all fundamentally the same thing, right? What do most people want? A roof over my head, money in my pockets, good food, lights, basic things, travel, whatever. So it's the same thing when it comes to money. We all want fundamentally the same thing. we want to make money. Everybody's idea of a good return might differ, but nobody wants to lose money, right? So, I mean, the takeaways for me were just that exposure to lots of different things. I mean, with crypto, I've been in crypto since maybe 2016, 2017. I got into crypto by accident, but crypto, I kind of shaped my crypto skills because I did a bit of crypto writing at Nairametrics. And I remember when we used to write about crypto initially, people would send out angry messages that we're writing about crypto, this is a scam, what the hell is this? And fast forward now, I don't think I mean, sure, there always will be people who believe crypto is a scam, but I think those voices are much lower. And so really that's been the biggest takeaway. It's actually not been a limiting factor. I think the biggest benefits, I mean, pay was okay and all that, but the experience, right? And if you do finance well, you manage your own money better and you see things differently. So that's something that money cannot buy. You can have all the money in the world. The money can pay for great advice, but you cannot get a 360 perspective, because the perspective you get is the perspective of the person who's going to advise you about your money. But if you are a finance person and you're spending most of your life thinking about money, then you have a wider perspective because
um, yeah, so it kind of resonates with what I'm also experiencing. Prior to when we started the Nigerian Investor Podcast, I've been investing in the stock markets. In fact, I've been investing in the capital markets in general, not just equities. But since we started this podcast, we've been able to bring some knowledgeable people to the podcast to have a chat with, and I've learned a lot from them, because most times when I look at my portfolio prior to starting TNI and what my portfolio looks like now, there's a huge difference, not just in numbers. I mean, both in terms of returns and the quality of stocks and the number of shares in these companies. There's a huge difference. So many things have stuck with me. So many takeaway from each of the interviews that we've had, and each day I keep learning. Actually, before we started this podcast, I thought I knew it all in the stock market, but bringing people here to talk, to discuss, ask questions, I just realized that I'm a small player when it comes to the stock market, because all what I thought I knew, they're just gibberish. They didn't really add up to what I was gaining. And I can tell you that my portfolio has changed within this period. We started September last year. Between September to date, my portfolio has made a lot of returns compared to the returns that I've made for a very long time, let's say like a decade. That's to tell you the power of learning every day, the power of always applying wisdom, knowledge from others. When they speak, try as much as possible to listen. And I so much thank God that I'm the kind of person that I tend to be very humble. I know when I am wrong. I know when I don't, when I need to learn, when I need to up my game. And I am also blessed with the ability to read, to study. So I don't just preach education to new investors. I do that too. I spend a lot of time online learning. I spend a lot of time buying books just to read and gain knowledge. So it has a multiplier effect. Like Aye will always say, when you talk about compounding, it's not just compounding your finances. Everything compounds. You read books, it compounds your knowledge. You start doing something that is meaningful, it compounds your skills, and over time you become good at it. So I think, yeah, I quite resonate with what you're saying. Being a financial analyst helps you personally in your investing life.
Yeah, very, 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 very accurate. Yeah, I mean, even drawing from my own personal experience, right? Just the curiosity around stock market is even what led me to working in finance. Just reading about finances, books, is what has sort of helped me branch into this career. And then the career now is even helping me learn new things. So it's a very exciting experience. And one thing I noticed, right, for a lot of people who are going deep into finance is that we tend to end up teaching, right? Because it's always the best way to keep learning. You end up teaching, inspiring new investors. So it's just a common trend. Like if you enjoy learning new things and you enjoy seeing that route, you will enjoy teaching, and then you will find that that teaching is also impacting your analysis, your ability to spot trends and all of that. So it's even with this, I'm even just going to go straight to my next question, right? You're a big advocate for investor education. So what's that one investing principle that you think every beginner should master?
They need to know numbers. They need to know numbers. Unfortunately, we don't teach, I mean, mathematics is badly taught. Either it's badly taught or it's poorly taught, / people have a fear of math. But you can't do successful investing without numbers. And a lot of time, I tell my clients that a lot of the maths that you need to do with your personal finance and your investing, it's not complex. Like you can do it a normal, you can do it a normal basic calculator. And thank God for the internet. You can run some of these things via calculators online, or via AI models online. And so really, people need to learn numbers. I find that a lot of times when people keep asking, what should I do? Or I bought XYZ. Should I sell? Should I keep? It's a numbers decision. Decision to enter a stock depends on if you think it's cheap or it's expensive. And the decision to whether a stock is cheap or expensive will depend on what numbers you're looking at and what those numbers tell you. So I think people need to learn numbers. Just understand what's earnings per share, understanding price to earnings ratio. I mean, those are basic things that people need. It's even being able to understand what is profit and loss. And there's a difference, obviously, because you can make profit on paper and the profit doesn't translate into your retained earnings. So people just need to understand numbers. And I know, I understand maths is a weak thing, but you have to learn.
Okay. Yeah. So the reason why I'm 100% agreeing with you is because yesterday I spent over 6 hours on the phone on WhatsApp with my friends. I've introduced them to the stock market. I think some years ago, 2023. Since 2020, I've been trying to introduce them to the stock market. So some listened. I think about 3 or 4 of them listened, and they've been investing. But so far, what they did was they just looked at the well-known companies, Zenith Bank, MTN. So that's where they just invest their money into. But they don't really understand the metrics and the reason why stock prices move and all that. So yesterday, it happens that we're just talking, and I just brought up the issue of financial education. I always bring it up whenever we're talking, but yesterday, I don't know what happened. Maybe because of the way the market has been running. So they were just asking questions, and I brought it up. And I actually said, okay, let's look at how you can evaluate a company to see if this company has some potential for you to make money if you invest in the company. So we just started looking at different companies. So we talked about a balance sheet. We talked about cash flow. So we mainly dwelled on balance sheet because, to my surprise, they didn't really understand what asset is, what liability is, equity. So I was shocked. I was like, but you guys have been investing since 2023. So what have you been learning? And anytime there is a new episode on the Nigerian Investor Podcast, I always share it to them. So I was thinking probably they listen to the podcast because I don't really get questions from them. So I guess probably they don't listen. So I was like, we've done episode on cash flow, we've done an episode on a balance sheet, income statement, and all that. And they were very short episodes, like 12 minutes. So you guys have not been listening to all this. And just to cut a long story short, we spent over 6 hours yesterday on WhatsApp trying to dissect the financials of companies. And I can tell you, even right now as well, doing having this interview, I've been getting messages from them. And they keep telling me, I looked at UPDC. I think this company is interesting. All of a sudden, overnight, they are not showing interest. They keep asking me questions. They keep sending me messages throughout the night. Like, I looked at this company, CWG. What do you think?
Nigerians aren't very.
Yeah, we can hear you. Go ahead.
Yeah, so I was saying that I think it's how it's taught. Nigerians are.
Yes.
Nigerians shy away from asking questions. So, I mean, I do a Twitter thread every Monday, and somewhere in the thread, I put an anonymous link where people can ask questions, and I have my email address where people can ask questions. And I find that every time I do the thread, I get questions. But every other place, okay, maybe on YouTube I get questions, but every other place I don't get questions. So people would ask questions anonymously, but they won't come out openly to ask questions. So I think the culture doesn't encourage curiosity. The culture encourages that man,
Yes.
you need to know this thing. And if you don't know this thing, man, figure it out. Or you figure it out
Yeah.
observing people, or you see what somebody is doing. And I think this person has sense, so I'll follow what they're doing. Maybe it's right. And if it's wrong, I'll follow another person. And if I get heartbroken too much, I'll just forget about it and pursue that thing. So that's the environment in which we are. And because a lot of people who are investing now, especially for those who are in their 30s and 40s, there is less curiosity compared to people who are in their teens, early 20s. Because then I guess at that stage in life, maybe there's more curiosity or maybe they are more adventurous. So one has to factor all these things in a decision making process. And just generally dealing with people on financial literacy, you just have to know that some people would be shy about asking questions. Some people might wait till when you blow up or when you become famous, and that's when they ask you questions, or that's when they come and see what you do. And so you just put all these things just generally teaching people. And unfortunately, I don't have the time to spend 6 hours with anybody. So even for my family and friends, um, I have a narrow band of family and friends that can help others. Sometimes when I just see that questions are a lot, I say, you know what? You need to sit down with someone that can walk you through all these things, or maybe put a couple of them together, then you do 2, 3 hours and all that. So yeah, that's one of the Nigerian um unique characteristics you have to factor.
Yeah, that's true because yeah, I see the anonymous questions that you tweet sometimes. And yeah, from those anonymous questions, you can see how freely they are asking those questions. Because of course they know there's this invisibility. Nobody will know that it is me that is asking the question. And so that way they are very free to ask any question that they want to ask. Nigerians were very proud people. We don't want to show our weakness in public. I think that's one of the reasons. So do you have anything to add to this?
Yeah, so you clearly live and breathe investing, right? I mean, it feels like your whole life revolves around investing from all what you've shared, right? So, but outside the markets, right? Outside all this financial stuff, what fuels your creativity and consistency?
So what fuels my creativity? A lot of culture, if I can use culture. I mean, I'm someone who's very big on music. Luckily, my job lets me listen to music as I work. And also maybe because of my immediate past job, I had to be one that made me to be very, because if you're going to teach people about money, you have to teach them in a language that they understand. And if you're going to teach Gen Zs and millennials or young people to put them all together, you have to use what they know. That's one. Two is when you look at media generally, media is a platform that you use to teach, whether it's YouTube, Instagram, Twitter, it's media. You are competing with two things. You are competing with the cost of data that is expensive in Nigeria, and you are competing with entertainment. Because whether we like it or not, people would rather spend their time arguing about APC versus PDP, or arguing about whatever is trending on social media. If it doesn't work all the time, but if you are not in touch with those things, then you cannot give examples. So my creativity, I mean, for instance, something we used to do at Money Africa. Nigerians are big fans of Big Brother, massive fans of Big Brother. So at the end of every season of Big Brother, we would write a letter to the Big Brother winner, and generally it's just basic normal everyday financial advice that everybody can use. But it used to get a lot of traction because everybody could relate to Big Brother. And so because of that, because I knew that we were going to write a letter to the Big Brother housemates, it means that I had to follow Big Brother. So I can tell you that at least for the last 3, 4 seasons of Big Brother Nigeria, I followed accurately. And I'm someone who's interested in psychology. When you have put Z12 or whatever number of people in a room for 90 days or 60 days or whatever, that's a wonderful human experiment. But from a social media's perspective, it's good. So you can use anything to teach about money. You can use, I'm a music fan. You can use Fela's music to teach about money. If you're a fan of Overtake, Don't Overtake, which is a Fela song, Fela is narrating about inflation and his friend that wanted to buy a fan and was saving and saving and saving. At the end of the day, he couldn't buy the fan because of inflation and FX issues. That is music, but that is economics that's being taught there. That's an economic lesson that you can learn. So, I'm constantly watching. I mean, I spend a lot of my free time, watching fashion, music, because there's money in everything. Everything people do is a money decision. Sometimes life and death in Nigeria is a money decision because, if you don't have 5,000 naira or 10,000 naira to buy a car, they are not attended to the hospital, then you're going to die. That's a money decision, as basic as it is. So I'm constantly also listening to music as motivation. I'm a big Jay-Z fan. I'm a big Rick Ross fan because there are lots of nuggets that I can take. I mean, I'm sure between that Nairametrics or Money Africa, if you check their Instagram handles, you see lots of references to your Jay-Z, your Biggie, because almost everybody who you can think of in music has probably done a song around money or done money lessons, or you can draw money lessons from them. And that resonates with your audience. I mean, so if you take the video song, what's the name of this song? Anywhere money there shall be there. As you can make content from that. It's simple. Anywhere money is involved, and as long as you understand it, man, I'm involved. So by the time you draw lessons from across 5, 6 Davido songs where Davido was talking about money, or where MI was talking about money, you are connecting with an audience that really does not care about financial information. But you mentioned in the video, I mean, that it's like Arsenal, Real Madrid, or Manchester City, or any of the league, Premiership League clubs. There are people that's the only thing they do outside work, sports. So you also have people that the only thing they do outside of their hustle is their music. They are OBU or 30BG fans. They are Big Bed or Wizkid fans. So if you take me, and so that's just an example of culture. And so if you want to teach, you want to learn, you want to reach out to people, then you must connect with the culture. And remember, culture is always lateral. There's culture above. So I can do a post on Fela and the guys who know Fela will connect. And I can do a post on Wizkid and the guys who know Wizkid will connect. But if you don't know Fela, you don't know Wizkid, you don't know Big Brother, how are you going to communicate with that generation? Like, how? For me, it's not just about culture, but it's also about learning. You'll be shocked at what people are interested in or what resonates with people. I mean, so for me, that's where my creativity comes from. I've done posts on, if you're familiar with Lagos, when you go to the market, there are these guys who stand around and they try to draw you and say, what do you want to buy? I'll take you somewhere and all that. And they make some money from it, get a cut from it. I've done a story on that, on someone like that. That's something that connects to people because everybody who's been to a major market in Lagos Island understands those kind of things, So for me, culture is, and once you are disconnected from culture, you're disconnected from life. That's just reality. The day you stop caring about all those things, man, you are gone. You might as well just hang up, retire, and go and do something else. So that's where I draw my creativity from. I do a weekly newsletter where I just throw in bits and pieces of all the different things that happen that don't fit into the stock market, but I find interesting. And so when I'm titling, I mean, I can talk about music, I can talk about art, I can talk about anything. And people connect with you for different reasons. So some people might come because you're funny, some people might come because of the music, some people might come because of your club, but they would stick around and learn if you're able to speak the language that they understand.
That's interesting. That's very interesting. I never thought about it that way. Yeah, because all I think of is so I think of the timeline is divided. You always have fans for this, fans against this, and all that. But yeah, from what you just said, that you can actually unify people by bringing bits and bits and bits of every aspect of the culture together and still pass your message. So softly, you're passing your message, and you might really hit the nerve on someone. So yeah, that's interesting. Before we let you go, what is one investing mistake you've made that turned into a valuable lesson for you?
I will give you two. So, the first one was I I got the opportunity to invest in a beach house a few years ago at Ilashe. Ilashe is it's a beach, a private beach, I guess you can call it that way. It's a beach generally. You have people staying there like anywhere else, but people just go there to hang out. So I think this was 2015 or 2014 or 2015. And a couple of friends putting money together and they're going to invest. I think it was like 30 or 40 million or something. So everybody was doing like 1 or 2 million and we all put together the money. And I passed on the opportunity. I put the money into Total shares because for those who are new to investing, every time we had, when there was fuel subsidy, you would have the government hold on to the price till it was unbearable, then they will release the price. And then you have upstream guys adjust their prices overnight. So you would have the price of downstream oil and gas stocks and go. So I knew that this was a cycle that used to happen always like clockwork. So if you had your money there, and just the same thing with the whole post market bounce after devaluation, those things are predictable. Um, so I opted to put my money into Total shares, and the guys went on with the beach house, and they ended up making more money than me. I think I did maybe 30, 40, 50%. I mean, they made money. They sold out after a few years, but they made maybe 5 or 6x. Um, what they put the money into, because literally every weekend something is happening there, Friday, Saturday, Sunday. So that was also a valuable lesson for me because I think it taught me that, once in a while you need to leave your comfort zone, especially if you can afford it, and and take the risk, because the essence of your comfort zone is to create a wall of safety. But once you've achieved safety, or once you've achieved knowledge, then it's okay to try new things. And even if you lose money, well, you still have your knowledge and your circle of competence that will always make you okay. So that was one investing mistake I kind of made, or investing opportunity I passed on. Then I think maybe the second one was I should have held on to some of the penny stocks that have become not so small stocks at the moment. Again, that comes with experience, because I remember for a long time, Wapik Insurance was stuck at 50 kobo, and I was there like forever. Until one day the stock jumped to 60 kobo, and then I sold. I was happy. But if I'd held those shares till now, I think I would have made a 4x or 5x. But when I think of it, 6, 7 years ago, I had very little knowledge. I mean, if I had the knowledge I have now, whereby I can read a financial statement, I can understand numbers, I can forecast, I can value stocks, then I would have been able to value all those stocks, and I've held on to them, and I've made a bit more money. So I think those are the mistakes I would say made and all. But I mean, I've been lucky. I think I've been pretty good with money, and so far I haven't made any crazy expensive mistake. Yeah.
Quite interesting. I think this is a story every every investor is always going to have about that one that got away, or those ones that got away, right? I think there's this mistakes of omission versus mistakes of commission argument. And the mistakes of omission always tend to outweigh, because when you calculate just how much money you missed out on because you didn't pull the trigger, you didn't say yes to an opportunity. You just say, "Oh my God, I wish I just had a little more faith, or just a little more patience, or just gone with this." Right. So this is just something that every investor is just, it's a story every investor is going to have. There's always that painful story. I think newbies just have to come to terms with this. You're going to have stocks that you miss out. You're going to have opportunity. Let me not say stock. You're going to have opportunities that you miss out on because of one thing or the other. Either it's lack of liquidity, not enough information, or just basically not having that strength to just say yes. Like you mentioned comfort zone, right? So yeah, this is something that even I've noticed, right? You just tend to be partial to stocks. because it's just easier to analyze, it's easier to enter, right? There's just enough. So you just feel more very, very comfortable. So this was a very beautiful insight. I'm very, very glad you shared this.
Thank you so much, Onome, for sharing your experience with us and with our listeners. It's been an absolute pleasure having you on the show today. Thank you for sharing your incredible journey from how you got started in finance to your thoughtful insights on current bullish Nigerian market, the risk new investors need to watch out for, and how you juggle personal investing with your professional work in the capital markets.
Thank you for having me. I mean, this was fun.
Yeah. So to our listeners, if you've enjoyed this conversation, please show Onome some love by connecting with him. Subscribe to his YouTube channel. His YouTube channel is Green Ticker Warrior. All right. Thank you all and have a nice one.
All right, guys.
All right. Thanks. It was nice having you.
Thank you for listening to another episode of the favorite podcast that brings insight to the Nigerian stock market. We hope you enjoyed today's episode. To get more episodes like this, follow us on YouTube, Twitter, Facebook, Instagram, TikTok, Amazon Music, Apple Podcasts, Spotify Podcasts, as well as on our website. All this information is available in the show note below this episode. Until we bring you another episode your way next week. Bye for now. Mudi and Aye podcast is executive produced by Mudi. This episode was edited by Rona at Rockwari Village Studio.